Hello, everyone watching on YouTube and listening on Spotify. It's another episode of NRG Insights. And for those that are new to it, don't know what we are about, as the name suggests, it is insights into the market, whether that be specialist lending, whether that be broking, commercial and resi, or a kind of ancillary product in between. Just bringing on some influential figures in the market who can kind of talk about the challenges and the wins that they've had. So today I've got Ash from Magnet Capital. Thanks for joining me, Ashley.
Thank you for having me. I'm a little bit gutted you didn't build this one as the battle of the two industry great beards, but
I've really trimmed mine down this morning as well. This will mean nothing to anyone on Spotify. But I accidentally slipped with the rate clippers, so I had to trim it
that's
even
the
more.
danger. That's why I don't go near it. Because,
beard.
if you make a little mistake, then all of a sudden you've gone.
You've got to start again, haven't you? That's the trouble. You can't. Yeah. It's but they do grow back.
Yep.
I'm sure there's someone can make a business analogy about that on LinkedIn.
Yeah. I wouldn't. I don't think we're quite there setting up our own networking group for member gears in finance.
Well, I actually feel because I know you could have actually gone yesterday. I couldn't go to the young people in bridging, so
okay.
I think I should set up like a grey beard thing. Although yours is actually not got that in yet.
Yeah.
But so back to you. Talk to me about people that don't know you and people that don't know Magnet Capital. Talk to me about your kind of journey in financial services to get to where you are now.
Yeah, of course. So I'm Ashley Ilsen. I'm a chief executive and co-founder of Magnet Capital. We're a leading provider of development finance, so short-term lending mainly for new build construction projects. We do things like barn conversions, office to resi, but anything with a kind of a heavy building element is what we lend on. Mostly residential schemes, so houses and flats. We launched in 2018. So as of this month, it's 7 years since we started.
Amazing.
And my original background was working for another lender. So I went to uni. I did my master's degree in China. I came back home, just like everyone else. I was kind of twiddling my thumbs, kind of blindly applying for various graduate roles. To very little.
When was that, Ash? What year was that?
So that would have been 2012. And I think I've told this story before. I'm one of the last people in the generation to get a reasonably successful career out of applying for a job in a newspaper. And I'll tell you why. It's because my mum saw it.
In 12?
Yeah. My mum saw it, and she was like, "I'm going to apply for this job for you," because I think she was sick of having me sat at home. So to a very great extent, I owe my career to date to my mum. She came to the interview, a couple of stages of the interview went really well, and I joined a local development finance lender in 2012. And I came, obviously, like most people, not knowing anything about short-term lending, property development finance. I don't think anyone has ever left uni and thought, I can't wait to get my teeth into property lending.
I can't wait to do financial services.
Yeah.
I always tell this story, right? But the only person that genuinely did is Sandeep Patel. Because all of his family work weekends, and he found out that financial services, you didn't have to work weekends. He's genuinely the only person that said, "No, I wanted to do it when I left uni." I'm like, really? Everyone says how they fell into it.
He's definitely the first I've heard of. Look, I think virtually the fact not many people know the market is there. I think they think of banking, I think they think of mortgages, but they don't think of specialist lending. Which
I don't even think they think of mortgages either. I just think we'll talk about that more later, but. It's a great industry to get into, and people just don't know about it. They don't know, like you say, you leave uni, no one's waxing lyrical about no one really understands how money works. We're not taught it, so we don't understand that these guys aren't just rich builders. They need finance and that kind of thing, and it's the interesting side of the market.
Absolutely. And when it came down to it, I had what's the choice? I had really got quite far in a graduate scheme for a large biscuit and confectionery manufacturer, or property finance, and so it was either this or spending my life in a factory, kind of probably doing numbers of stock and stuff like that.
This or biscuits? It doesn't make it sound like it's
And I've had enough biscuits in my life, to be honest.
So sorry, I interrupted, but you were 2012. You got to dev finance, and then from there.
Yeah, so I joined Regents Media, a great short-term lender who'd been around for a long time, had a great reputation. I was fortunate enough to work in a very flat management structure. So over the next 5 or 6 years, I was able to do some fairly high-level stuff for someone my age. I got an opportunity in 2015, 16 to run the business alongside my current business partner, Sam Howard, who was also a director in Regents Mead, which we made work for a couple of years. So Regents Mead was quite unusual because it was predominantly a property group and a medical research charity that had a lending arm, like a trading business.
That's an obvious connection. Yeah, medical research.
Yeah, exactly.
Lending. Yeah. I don't know why I didn't make the connection before.
So that's where a lot of the money was going, and we were just lending a private individual's money. And we got to 2017. I think he was, approaching 80, and he said, "You know what, boys, I don't want the stress of dealing with this. I'm almost 80. I don't need the hassle." We were still young enough that we quite enjoyed the stress of dealing with it. So with his blessing, we moved the team 5 minutes down the roads. Same core bank of clients, same core bank of borrowers, new investor, a funding line from Shawbrook Bank, which I think we were one of the first new lenders to ever get a line with Shawbrook straight out the traps. So that was quite a nice compliment to us and the reputation we had. Then away we launched, and we've been slowly building since 2018, building a loan book. We're now at 12, 13 staff. We are based in Mill Hill in North London, and I think we've again, it's for us coming into a really crowded market already, like bridging, development finance. There's lots of different lenders. There's lots of money still there. You've got to try and do things a bit differently and take yourself out for the crowd, especially if you're not going to compete on pricing and you're not going to compete on risk. But the beauty of development finance is there's lots of different areas you can compete on. Whether it's genuinely, I hate when people say fast and flexible. And
What's your USP? Fast.
Yeah, okay. Fast and flexible. And it's the one thing I tell my BDMs, it's like, for whatever you do not go into a sales meeting and say we're fast and flexible. In fact, those words are banned. I'm going to use them anyway. Because what does that mean is, in practice, you can actually, if you can demonstrate it to your brokers and to the end user in practice, that's a big difference between saying you're fast and flexible. And I think there's lots of lenders that say they are and genuinely aren't at the end of the day.
Yeah, that's interesting. So how was the shift in the last 7 years? Has it been quite steady, or have you come? Because obviously I've known about you for a while, but there is still 240 short-term lenders out there. It's hard to get your head above the parapet, and I feel like you're there now. But how long did it take?
This is the thing no one tells you when you're starting a business. You just think of the upside, and maybe that's just me. I'm an optimist. So you're like, yes, it's going to.
What can go wrong?
Yeah, it's going to be great. And we've had since we launched, we've had COVID. The Liz Trust budget, bill cost inflation thrown in our way, and we've managed to deal with all of it. So the thing is once you've kind of weathered one storm, there's always one around the corner. What I found is over the last 7 years is running your own business. You just got to get used to dealing with hard times, and it's just part and parcel of it, because it's not all plain sailing. And it sounds obvious, but when it comes into practice, and the problem you're going to get next is always the one you haven't thought of. So whether it's
you couldn't guess COVID, couldn't guess
exactly. You would have predicted that.
Effect.
Yeah, exactly. And it's you can always try and cover yourself, but it's not something that you do consider. But in terms of 7 years, it's been. We've made a profit every year. We've grown our loan book every year, which is what we set out to do. We've expanded our offering in terms of our criteria, which was, I think...
You always got to look at that out of interest, Ash. It's just in regards to... I'm just checking as well, actually, because I keep shortening your name to Ash. I'm pretty sure I've called you that before. That's all right, isn't it?
Yeah, Ash. Yeah, no, that's great. Yeah. Friends and family call me Ash Marcus, so you're welcome to, mate. Absolutely.
I completely forgot where I was going. I was just really concerned then that I was using. I was shortening the name. But in regards to the development, in regards to the product side of things, you just mentioned that you've got to kind of innovate a little bit. You've got to be moving all the time. How do you make that decision? Because you can't just copy someone else, can you? Because it's a crowded market. What has led to your criteria changes and that kind of thing?
It's a good question. You as a lender, you have to understand. I think the problem is everyone has criteria, but ultimately your criteria is it's a sales pitch. What it comes down to, and this is why I love development finance, and with no disrespect to bridging, this is where the complexities come a lot further, is sometimes you can have all the numbers and the stats on your piece of paper in front of you, but it's just a gut feeling as to why you shouldn't fund this project. And I had one of those 2 weeks ago where, good guys had a nice project in Lincolnshire. My BDM was really enthusiastic about it. The broker was on board. Everyone was really happy.
Not like a BDM to think
of course, that's his job. Of course, that's his job. Yeah, and you're right. It would be really worrying if you bought a deal and you're like, I don't know about it. That's my job.
Don't go straight to the credit committee with that one.
Exactly. It always happens. We met with them, and you know, something just doesn't smell right. And I've been doing this for 13 years. I wouldn't call myself an expert, but I really know what I'm talking about. And you just something didn't smell right, didn't feel right, and I turned the deal down, and it was nothing more than that. It fit our criteria, but after a while, you just get a sense, a sixth sense for these things, which is why with bridging, everything is so much more transactional, and which is high volume, it's transactional.
You find that works the other way as well on a positive when it doesn't quite fit, and you're like, do you know what? I just feel this work. Is your gut feeling generally leaning towards survival than like taking a punt on something?
Depends how I've woken up that morning, I guess.
If they take a punt, you know what I mean, like an educator.
Yeah, of course, yeah. No, look, I mean that's why we're part of a great team. So my business partner Sam Howard, who's I suppose the other side of the credit committee, and when you go into business with people, you got to work with people who are A, very different to you, and B, people you can bounce off. So there's every time we sit and look at a deal, we throw things at each other, and we just have this kind of organic process where we maybe uncovered something just from having that discussion. I would say I'm probably a little bit more on the bullish side. He's more on the bearish side, and we end up somewhere in the middle.
You need that though, don't you? That's genuine. Though. There's no point in getting two of you doing exactly the same thing. Like it doesn't make any sense. That's just someone nodding at someone else. Yeah, exactly. Like you've got to have that. You've got to have two different characters.
Exactly, totally. And I don't think I could ever be in business with someone who was similar to myself, because it would be a disaster.
I always say that. Surround yourself with other people, because no one needs to be in a room.
Yeah.
So let's talk. The thing that really interested me, and the reason we were talking before, is that you've gone down maybe a different route to a lot of people when it comes to like the recruitment, the staffing side of things. Is you're really big on training people up, aren't you? And you've had some really good success from that. Talk to me about that. Obviously, one of the positives is you haven't got a BDM who wants 9 on 7 figures to begin, to bring their black book and that kind of thing. But what are the challenges and the positives about it?
The challenges are, I think this is the hardest time that I've been in the sector to be a BDM. Like you said, 240 odd lenders, very similar products. And if you don't stand out, I think firstly you have to stand out as a person, as an individual. And this is why we've actually got better at bringing salespeople in to train them. Is that I met so many great people that have come in for an interview, and I thought, oh, you're great, you're really smart, you're switched on, but actually you weren't very memorable. And you didn't have that kind of X factor that I think some of the really good BDMs in our sector have just got about them. And whether it's, I think it's a bit of a swagger about them, whether they've got kind of...
It's that memorability, it's really interesting. And these always resonate with me, whatever's happening with me, turn around on me for a change. But I've literally just turned down someone for here, and they were fantastic through the interview process. But the words were like, I couldn't really remember what we talked about, or I couldn't really remember, like I couldn't pick up a line out. So it's true, isn't it? Like as a BDM, you want number one, when the phone goes, their number comes up, you want to pick up the phone to them, but you have to have something, don't you?
Absolutely, 100%. It's what we used to call when I was at uni. It's what we used to call peacocking. When you went out to the clubs, you got to have an angle. Whether it's wearing wear a silly hat, or I dye my beard, or something like that. And I think you've just got to have that out, or something equivalent to something about.
So the best thing to be a BDM is just to have a silly hat. That's the
that's it. I think silly hats will open doors for you, because.
Oh, do you remember the guy with the sombrero who does the death fire?
Yeah. I'll give him my deal, but you get my point. Is that there's no where's your USP? Because many of the lending, the lending world has been kind of filtered down to the point where we're all selling really similar products, give or take little bits here and there. And the ones who can really forge the relationships with the brokers are the ones who have just got that X factor about them. But to answer your question before, we've always really enjoyed the idea of training people up and who have never been in this sector before. So either they've come from an estate agent background, or a property background, or recruitment, or something where it's very sales driven. They like money and they want to get out and do deals, so they've already got that grounding, the foundation to become a really good quality BDM. We found that training people up and training them, firstly, our way of doing things, because we do internally, we are probably quite different to other lenders. And secondly, I think you breed more loyalty with people. And if you I think I said to you when we met the other day, we just got, for some reason, we just got really lucky that we've never really had a bad egg in our business.
Not luck, I say this to everyone. Do you know what? So many successful people come on here and say, we've been really lucky with this, we've been really lucky with that, but it's 100% engineered. It's how you have done your recruitment or how you are as a person. Or there are people there that will also say like, we've tried it and it doesn't work, but they won't put the time and effort in. I mean, it takes deep pockets and patience, right? Like, they're not earning it straight away. They haven't got a network. And you've got to be really patient. So there's way more to it than the luck side of things. But it's still tough, right? You still got tough to train people.
Yeah, it is. It is. And it's like, again, another cliche, it's sink or swim. You've got to be, you've got two options. You can sit there and wait for the phone to ring and, twiddle your thumbs, or you can go and make it happen. And one of my BDMs came in earlier this week and said, I was in traffic with my wife and baby in the back of the car. There was a van in front of me, just come off a building site, doing a development. So I rang it and we're going for lunch. I said, honestly, just
as a BDM,
just loved it. I almost like melted into my chair. I was like, yeah, you've nailed it.
I mean, they completely made it up, but it's brilliant. It's great. That is genuine, isn't it? So looking for opportunity, but I suppose that is the thing that we can't teach, because you have got that double jeopardy, if you like, when you take new people on. And I'd sound like I'm digging it out, but I'm not, because I love it. I think we have to do it because there's a massive skills gap, but you run the risk of bringing on 100 grand BDM and them not clicking with you. You doubly run the risk with a lower guy because you don't know if they can actually do the job yet.
Yeah.
I mean, we're looking at it. Go on.
Yeah, look, you're right. But also there's the time that we bring in someone, we pay them less, but we spend so much of our time and money and investment into them, and then they leave. And that's the flip side of it.
Yeah. Well, let's talk about that actually. That's one of the challenges, because I have this conversation, we have frank conversations with people all the time, like grad schemes and stuff. The potential issue is, and I'm going to clip this because I say it all the time, but you train people up really well and you kind of know their worth, but from the outside, people are worth a little bit more. So you're constantly running the risk of how much you have to pay to keep people, or how much it costs to replace people. And I appreciate it because that's my side, right? I move people around for a living. So I understand the frustration of it, in that you constantly have to think about how to keep people happy. But how do you overcome those challenges? Because everyone wants everything now as well. It's a tough market to build a team in.
Yeah, and look, as you know, we're led by the jobs market and what the average pay is. It's not us that can necessarily determine that. But what we do, I mean, sales is easier, and we like to flip it round, and we probably pay on the lower side of what a basic salary would be, but I think we pay some of the highest commissions and bonuses.
Right at the top, yeah.
Yeah, which I love that, because if I've got a BDM who's new to the sector, and in a couple of years they're earning 6 figures and beyond, then happy that you've earned that, mate, and that's all down to you.
And you will get guys who are on 70, 80, the top end ones that aren't earning what your guys are earning on less.
Exactly, yeah.
And so they've got to back themselves, but the issue is that we are in a market of, and that's why it helps with the guys that are out the market, we're in a market where people are asking for astronomical basics, and you must have come across it when you see people experience and go, well, I want this. And like you just said, Dennis, is really true, and I hope this rings true to people. Like, we don't pick the salaries, especially in recruitment. Like, we don't choose. It's the market that decides how much people are worth. We can say people are worth it or they're not, but it's irrelevant.
Yeah.
People will move for X amount, so that's what the market is. That's what it is. It's just, I'm sure people think that we fix the salaries online. It doesn't happen.
You're influencing the market behind the scenes, Marcus. That's the problem.
Yeah. Do you know what? There are some genuinely incorrect influencing people in the market who are offering like 150 grand for a BDM just to get a face. But then all of a sudden that guy's worth 150. So the guy on 70 is worth 100. And actually they're not. And that guy loses his job. And then they've set their sights on this 150 grand a year life with no commission, and they're not going to get it elsewhere. But that then skews the market completely.
Yeah, it reminds me of there's a Harry Redknapp story from when he was at Portsmouth, and I can't remember which striker he bought, but he bought a striker, and he said, "What
was it? Defoe?
Maybe it's a Defoe." And he was like, "Right, what's my goal bonus?" And he's like, "Goal bonus? What do you think I'm paying you to be here for?"
Yeah. Do you know what that was? It was Jermaine Defoe's mum was his agent.
Oh, really? Okay.
I'm a Pompey fan. Okay. So it was, Defoe's mum was his agent. She said, "So can we talk about his goal bonus?" And he's like, "That's his fucking job." But it is true, though, isn't it? And but also, again, it's not even those people's fault that are looking, because that's what the market
Exactly.
All is sales, right? We all want to make as much as we possibly can.
Everyone's got to make a living. Everything's so expensive out there as well, and I totally get it. And in fairness, so our office is in North London. We could be in Central with everyone else. It's not as sexy. I think maybe younger people want to be in Soho or somewhere like that for the kind of the drinks after work.
Thursday night. 20 minutes on the train.
Yeah, but for the right people, exactly, it really works. You know, I can nip in the car, I'm home in half an hour. I could get out. They're obviously on the road a lot, so you can get out to other parts of the country a lot more easily. And it's just our structures worked really well to date. It's just what happens when you've got someone who's built up and they become really good, and then all of a sudden you're subject to the market, and that's just the way it is.
Yeah. Well, I mean, how do you combat it? How do you just got to try to, because you can't keep bumping up salaries you can. This is the ironic thing. If someone comes from externally, you can look at it, but internally, you cannot give everyone a 20% pay rise every year. You just would go out of business very, very quickly.
Exactly.
It's a tough one, isn't it?
I think you just got to look as an employer. You just got to create the best environment that you can. You create a business that people want to show up every day. You create a great working space. You surround them with good people. You make them realize that actually they're learning. So there's a value to the fact of where they are. And if people are good, you elevate them and give them more responsibility, and hopefully they see value in that as well. So look, there are other levers you can pull, which I hope.
100%. Yeah, it's not I say that like salary is the only factor. It's a big factor out there. Working for someone who is a good person and can help you grow your career is a massive part of it as well.
Yeah.
I think it actually comes before. So I think salary is second when it looks at like drivers.
That's interesting.
Well, that's why there are companies who are really, really hideous to work for, but are offering 150 grand salaries.
Yeah.
Because that's how they get people. We can't. And I think they're kind of honest about it as well. I think that's just like, that's what we have to do.
Yeah.
This is how we treat people. So this is how much we have to pay. I think maybe just treat people better, but. So let's talk about we touched on getting those young people, getting them built up and that kind of thing. How's the tech side of thing evolving with you guys? It feels like some people are doing tech for tech's sake, and other people know that we've got to put it in. Obviously having a younger team, I'm assuming, benefits you from understanding tech, but what are you doing on that side of the market?
Yeah, the tech's an interesting one because look, we've been looking at it in development finance for years. And when I say we've been looking at it, we've been kind of almost admiring from afar, because I think I'd rather let other people do the R&D first and put the money into it quick.
So the early bird catches the worm, but the second mouse gets the cheese.
There you go. Exactly. And it's kind of what I said before, where bridging, I get it, and I think you could try and streamline everything, because bridging is high volume transactions. In dev finance, I think that ultimately you're investing in people's businesses, in their livelihoods. So we have a policy where we meet every single person we lend to, and we visit them throughout the project.
Can you do that forever? What stage do you get to where you can physically?
I don't
like, because I think most people start like that. But can you physically do it? Like, have you seen like a capacity point when you go, okay, we can't see everyone forever?
No, I think, and then everyone in the team's just got to muck in, and someone's got to go down there and have a relationship, and that's just how it goes. I just wouldn't feel comfortable lending. Okay, do a bigger loan, say north of 2 million, or even north of 1 million. I wouldn't feel comfortable lending that sort of money to someone for a construction project without.
Just hope it's there.
Exactly. You hope it's there. Go and see them. Go and drive around the area. Go and find out what they're about. And even then, we at the credit stage, we have a call where we do a video call. We speak with them, and because it's finance for their business. We're funding their business. Yeah. We're funding their livelihoods. They're putting money on the line as well, and we all want the same result. So
out of interest, Ashley, I don't know how honest you can be with this. This is just about being nosy, but if you've got a good asset, but you get to that credit side of things and you meet the client and you think, I'm just a bit of a knobhead. Assets, not even knobhead, that's not right, but you know what I mean? Like something doesn't feel right, client-wise. That's still a part of it.
I mean, being a knobhead, you still probably do a really good development job. So
so not knobhead, and you can lend to anyone. But,
exactly.
You know what I mean? Like, it just doesn't. I suppose it's that gut thing you talked about.
Absolutely, and this is where tech won't ever work. Is in some respects, is because the operations and maybe some underwriting and AI, you can get clever with that. But that actual process of we've agreed the loan, let's go and sit with them. Great asset. Okay. He's a bit of dodgy things happen to him here. Let's hear his story. What happened there? And you just, that kind of very organic process you can't replace that. There's no tech in the world that I'm convinced.
And also, there's so many variables with them. Well, I actually don't think it can be done that well in bridging either yet. I think there's too many variables, but I think they just start getting it right with vanilla resi.
Yeah.
Then obviously complex resi is still too many variables. I think commercial I just think we're too far off, because like you say, there's so many different things where the computer will never get a gut feel. I don't know if you know the story about the underwriting in Germany. Is it Holland? where they first AI-backed underwriting for car finance.
Yeah.
They lost millions because
Really?
there was lots of Romanians coming over and getting the car finance and popping back
Yeah.
to Romania, coming back. But it wasn't ever flagged by AI because they don't know what you know
course.
about how certain people act. It's not being disparaging to the whole country. It's just what happened in Holland.
No, but also,
And that's not a big. That's the first time when they were like, "Shit, underwriting cannot just be done by a machine because it can't see the client side."
yeah, but also if you're but the borrower, if you're borrowing money and okay, you've done all the quotes and you're like, yeah, I like the sound of them. I'd want to speak to someone. You know, it's like to how much of your life is I'm on the phone to Sky and I'm on hold and I'm dealing with a bank, and there's enough of that crap already. You know, if you have money to fund your business, to grow your business, to make feed your family. I'd want to meet someone, to be honest. I want to sit around a table with them. We'll go for a coffee or what have you.
It's honestly the partnership, isn't it? And I know it sounds cheesy, but it's the same as in our business. Like, imagine just never ever speaking to the person that you're doing. It's so important.
Yep.
You're a big part of each other's lives for a short space of time.
Yeah.
It seems mad that it would just be done by the computer.
Yeah, absolutely. And like we've got our retention rate is now close to 49%, which means that almost half of all our borrowers, come back to us again.
Come back.
Yeah.
That is the other benefit of dev as well, isn't it? Is that they do it for a living.
Yeah. That's
It's not like your mortgage. It's not going to come back in 5 years' time.
Yeah, that's true. Again, I had it was 2 weeks ago. We'd signed up a new loan in Finchley in North London. The borrowers came in to our office because it's local, and they said, "Oh yeah, we had cheaper offers. We just really liked the BDM and the sales approach." And
and also, and you can deliver. We touched on this earlier on, but your BDM can't just be amazing and your product be shit. Like you have to be able to deliver, but there's just those two aspects, isn't it? Because it's not about pounds and pence with dev, same as it's not about pounds and pence with most commercial. It's about wanting to work with the person and actually then being able to do it, because you can have the best rate in the world, can't you? But if you can't get it done,
yeah, exactly. And that's that's why I think look at the kind of the big bridging lenders that have done really well and have scaled quite a lot. They've done well for being consistent. I think more than anything else, from actually showing that they could deliver.
Yeah, but they had to do that when they started, didn't they?
Correct, exactly.
Do you know what I mean? Correct. Once you scaled, it's. I mean, it gets tougher when you scale, doesn't it? Because then you do lose kind of track.
There's different problems, and then you've got 100 staff, and it's all the fun of that.
But on that, actually, Ash, over those 7 years, what's been like the kind of the plateau challenges, if you like? Where have you been when you've gone right? I suppose it's easy to look back than it is when you're in it. But has there been any points when you go, well, that bit was fucking tough, or that? Whether it's staffing or whether it's how much money goes out the door, is there any bit that you've gone, that was a tough bit that people need to look out for?
Yeah, when bill costs went bananas, that was.
How did you deal with that then? Because you just had to price accordingly and hope.
Well, exactly. So bill costs have gone bananas, and by the way, your interest rate that you're borrowing at has also gone up. So that was, I think, very challenging for every. I mean, so. This is why
there's no good news stories about
there wasn't.
6 months.
And there was, anyone who said that they did okay in that period was is lying.
Well, how? Like, if the builders aren't making money, they weren't. Like, the margins were too tight, weren't they, for anyone to be doing much?
No, that's true. But it brings you back to your kind of the core lending principle, the core development finance principle. Okay, you've got to make sure they've got skin in the game. Therefore, they're not going to walk away very easily. You've got to make sure that there's headroom if costs do go up. So like some of the bridging lenders that have gone into development finance historically and then left very quickly are the ones who were like, 75% loan to GDV, easily we do a stretch senior product, we'll do that. Contingency is probably a bit minimum, and that's why you won't last very long. And you'll write loads of business overnight. You'll write loads of business, but it's you're here for a good time, not a long time.
Yeah, this sounds disparaging, and obviously I work with both bridging and dev, but. It's very different going the other way, right? Because the bridge is quite nice for you, isn't it? Because it's a relatively
that's why I don't
transaction.
Yeah, I don't write much bridging because what am I going to do? Be fast and flexible, It's just,
it can't add much more value. It's interesting, actually.
We don't have value in that space. There's no point. We won't have value. It will be a product like everyone else's. And I've got to be honest, I've got really good relationships with a handful of bridging lenders where we collaborate. We go on with chuck deals at each other. Because we complement each other, and I like it as well.
Actually, to touch on that, I did say it would be half an hour, but we're definitely going to go over because there's 20 seconds, and I've got another question. But how is that collaboration side of things? Because some people are quite insular, and I think the market is getting better. I think we are more open now than we ever have been. But how important has that been to your business, that you actually work with other people and you get on with other people in the industry and you talk about the problems, or you be able to collaborate on deals and that kind of thing? How's that work for you?
You know what, for having been here a while, I think you develop like, some of them are mates. So we can speak really frankly. I know the ones who are kind of give me BS, and I know the ones who are going to actually tell me how it is, and meet up with them occasionally. Like I said, we share deals. So whether it's we got a development, but we can't buy the land, so Bridges going to come and buy it because they want to change the planning. We bill it out. Hello, Mr. Bridging Lender, can you come and exit us now? And it's, or even if I get a broker who rings me up saying, well, we can't do this, can somebody else help? And we chuck it their way. And like I said, I think the industry is better off for that. And I know it sounds cheesy, but we're a better place to share things. And I know I know that the ones, the ones that kind of like sit there and talk rubbish behind your back. And the one thing I say to my sales guys as well is like, don't badmouth other lenders in a sales meeting. Okay, talk about why we're so good, because they'll, don't waste your time doing that. People will see through it.
Do you know what's really? I'm going to tell a story about another recruiter now, but it won't matter because they'll know where they're watching it. But we were at an event, and this person was telling the person that I'd taken with them, who they're just new to the market, and I'd given them so many contacts to get busy in the market, and she was telling me all the things that were wrong with me, and I literally could hear. Oh, no. It's so strange.
Oh no!
And the guy was like, "Guy said, if you can't read the room, like I can't help you.
Yeah.
But you haven't said one thing about yourself, and it's so strange to tell someone else that, oh well, they haven't been in it that long, or they've done that, or they work with these people, they can't poach from them." I'm like, it just doesn't. It's really awful to badmouth someone else in your industry because it just makes you look shit.
Exactly. Yeah, it's crap. It makes you look rubbish.
Yeah. Good. So what are the plans like for you moving forward? Have you got a figure in your head actually about like loan book size? You don't have to tell me what it is, but if you got that figure to go, this is like our sweet spot, this is where we're going to be in the future, or you just want to keep going? And
yeah, for us to be like a really strong business, considering we only write small dev loans, and bear in mind, obviously with a dev loan, it doesn't all go out on day one, so it trickles, build. So we want to get
it's constantly your books.
Correct. So our plan is to hit our target of loan book target of 100M, which we're not a million miles from with the direction of travel. We think we'll be there over the next couple of years, and to build a book just on writing small development loans for that is really difficult. It's really tough. It's very different if we were writing £5-10 million ticket deals, and then you write a handful of deals and you're almost halfway there.
Do you think that's where your point where you'll be comfortable? Do you think you'll get there and go, do you know what, 200 million sounds nice? Because every time I speak to someone who is at that, they want to get to like 150, 200. And funnily enough, when I speak to the 300 to 500, they're like, God, I love that 100 to 150.
Yeah. The reality is, Marcus, if you're speaking to entrepreneurs, then they're going to tell you, of course, I want more. And that's the point of being an entrepreneur. So yeah, absolutely, of course.
It's until you want more, then they go, oh, I love that 100 million loan. But when you're grafting away at 300.
No, exactly. No entrepreneur is happy where they are, trust me.
Yeah. Amazing. So one last thing, if you're speaking to someone now who is trying to get into that market, who have done like yourself, totally worked in it, what's the one bit of advice that you could give to someone? If it was you 7 years ago, what would you have liked to have heard that would have kind of helped you on your way?
I'm going to steal someone else's because I listened to a high performance podcast last week with Gordon Ramsay on, and they asked him the same question. He said, "You got to learn to dance in the rain," and I love that. Yeah. I love that saying so much because it's so true. You've got to get so used to being uncomfortable. And some days are really tough, and you've just got to learn to love them because that's reality. And if you want to be that,
I'm really trying not to ask another question on top of it because I keep saying but on that, right? I don't think people understand how tough, unless you're in it, because they see all the nice bits, right? You earn okay, you do right. People see the love, but like the stresses of running a business is like nothing else. You can't tell people until they started. But how? Yeah, like you just said then, how do you get in that mindset of going, you've got to accept that this is shit a lot of the time?
Yeah, so someone called me out the other day because I was sat there basically mumbling to myself, and I'm having a conversation during lunch in my head, and I'm thinking about something stressful happening at work. This was on the weekend, and that for me summed it up, is the fact it lives in your head. It has to be there because that's the reason why you do it, and that's what makes you get out of bed in the morning. It's like I said, you just got to get used to being in that place that's just can sometimes not be very nice, because what's on the other side would be very worth it.
Yeah, and you've got to love it as well, right? You've got to be passionate about it because it's too fucking hard to not love. Like, it just doesn't make sense.
Go and do something else.
Yeah. Amazing. Thank you, mate. I really appreciate your time today.
No,
Thank you.
Mark. Loved it. It was really fun.
Thank you
for
for
that.
that. It's really useful. If anyone wants to get hold of you, obviously all your socials will be on ours, but what's the best way to get hold of you if they want to talk about you guys as a business or generally, you as a leader, etc.? What's the best way to get hold of you?
Yeah, absolutely. I mean, through our website, magnacapital.co.uk. We're on Instagram at Magna Capital. I'm on LinkedIn, Ashley Ilsen. But yeah, we're very accessible if you need to get hold of us.
Amazing. Thank you. And thank you for everyone listening and watching. I appreciate your time. But thank you, Asha. That was really useful. Cheers.
Thanks, mate. Nice one.
Appreciate it. Bye.